This video is created by Jagrat Creations. It is on piecemeal distribution, hence useful to the students who are reading for CA-IPCC, inter-CA, BCom and professional courses like ICWAI Intermediate. I want to solve one sum on piecemeal distribution, that too by excess capital method or capital surplus method or say relative capital method. Just observe the sum that I intend to solve. This is the sum which I wish to solve here before you by surplus capital method. If you look at the liability side, outsiders payment is 24,000 and partners loan is 21,200. From the following balance sheet of Messrs. Ideal Stores, Sunil, Anil and Neil are the partners sharing profits and losses in the ratio of 5:3:2. The balance sheet as on that date of dissolution was as follows: fixed assets, current assets, cash in hand, capital of Sunil, Anil, Neil, general reserve that is distributed in the ratio of 5:3:2 because it is an undistributed profits, partners loan, creditors. First payment will be made to outsiders, then partners loan will be paid, then partners capital will be redeemed. Realization expenses estimated 4,000, actual expenses incurred 3,000. So after payment of 3,000, 1,000 rupees are left. So when you distribute the last installment, the distribution will be made not of 20,000 rupees, but it will be of 21,000 because 1,000 rupees are left with us after making payment of dissolution expenses. So last installment distribution will be 21,000. Now on the basis of this, I am required to prepare a piecemeal distribution statement. On the looking to the liability side, I should prepare the columns. So I will prepare a column for capital accounts of Sunil, Anil and Neil. General reserve will be distributed, so no need to prepare a separate column for general reserve. Sunil's loan and sundry creditors column will be prepared. Over and above, I will prepare a column for cash. Let me start preparing the columns. Prepare a piecemeal distribution statement by excess capital method. Now, capital of Sunil, then Anil, then Neil. This is the capital. Now, general reserve given to you in the sum 19,200. That is to be distributed in the ratio of 5:3:2. So if you distribute 19,200 into 5/10 means 1/2. That works out to be 9,600. Then 3/10 of 19,200 and 2/10 of 19,200, that will be paid 5,760 and 3,840. This general reserve distributed amongst partners in the ratio of profit sharing, so total capital payable to them will be the total of these things. Over and above, Sunil's loan is payable, creditors and cash column. These are the balances recorded. This is the distribution of general reserve. So after adding this general reserve, this is the redeemable capital at the time of dissolution of a partnership firm. Now, first installment, 61,280 added to the cash balance. From that I keep aside 4,000 rupees for expenses. So amount available for distribution, 66,880. First payment will be made to outsiders, that is the creditors of 24,000 need to be paid. First of all, I have got a balance, cash balance on hand more than 24,000, so I pay 24,000 to creditors. So cash on hand left with me 42,880. Partner's loan is 21,200. I have got sufficient cash to pay it out, so I pay Sunil's loan. Now I have got a cash balance of 21,680, which is to be distributed between partners Sunil, Anil and Neil. The amount to be distributed amongst partners out of this available cash will be worked out on the basis of surplus capital method. For that, I would like to prepare one working note which I would explain you, and how the distribution takes place, that will be made clear. So let me prepare a working note for surplus capital. So first of all, these are the partners' name, capital balance, Sunil, Anil and Nil. This is the total capital balance payable to them. Ratio of profit sharing 5:3:2. Now this is what I write. This is the name of the partners, this is the capital balance, this is the ratio. Now surplus capital method, excess capital method. How to find out excess capital? To find out who has contributed more capital, who has contributed less proportionate capital, that can be worked out on the basis of finding out capital contributed by each partner per 1 unit of profit. So share of Sunil is 5 units of profit. His capital contribution is 48,400. So per unit share in profit, how much is the capital contributed by him? So that I can work out 48,400 divided by 5. So I will get capital balance per unit of profit ratio. So 48,400 divided by 5, I will get a capital per unit share in profit. Similarly, for 3 units of profit, Anil has contributed 26,160. So what is his capital contribution per unit of profit? That I will work out. For 2 units of profit, Neil has contributed 29,840. How much his capital contribution per 1 unit of profit? That is the first thing that I would like to calculate. Observe it. So Sunil's contribution 48,400 divided by 5. So per 1 unit of profit, his contribution is 9,680. Anil has contributed 26,160 divided by 3. So his contribution of Anil for 1 unit of profit is 8,720, and the contribution of Nil per unit of capital is 14,900. On the basis of this per unit contribution, we should work out who has contributed excess capital, more capital. If you look at Nil's contribution per unit is 14,900. So his contribution per unit of profit, capital contribution of Nil 14,900, that is highest. Anil's contribution is the least, minimum contribution. Lowest contribution 8720, and Sunil's contribution is more than Anil but less than Nil. Now when you want to start giving cash against capital, the partner who has contributed surplus capital contributed more than least proportion, that surplus capital is to be paid. Now to find out the excess capital contributed by Sunil and Nil, we should take the capital of Anil 8720 as the base contribution required per unit of profit. So for 1 unit of profit, 8720 is the minimum capital contribution required. So for 5 units of profit, Sunil should contribute 8720 into 5. That is the contribution of Sunil as proportionate to the contribution of capital of Anil. And similarly, per unit of profit, Anil's contribution is 8720, and that much contribution Nil also wants to maintain. So Nil should contribute 8720 into 2. That is the total contribution required by Sunil and Nil, which is in proportion to Anil. So let me work it out. For that, remember one important suggestion. See, this is the capital contribution per unit calculated here, recorded here. Now, out of this per unit contribution, find the minimum. So, what I suggest, select the lowest capital per unit, multiply that lowest capital with the profit sharing ratio. So, this is the lowest one. Multiply that with 5. So, Sunil is required to maintain 43,600 capital, which is in proportion to the capital of Anil. Similarly, Anil's contribution of capital is the minimum one. So that is taken 26,160, 26,160 is taken as the base. And on the basis of that, Neil is required to contribute 8720 into 2. This is the contribution capital required to be maintained by Sunil and Neil in proportion to Anil on the basis of per unit share in profit capital contribution. So, proportionate capital on the basis of A means Anil, this is the proportionate capital required. Now, actual capital is 48,400, required capital is 43,600. So, by difference, you can find out the surplus capital. So, 48,400 minus 43,600, this is the capital surplus of Sunil as compared to Anil. Similarly, 29,840 minus 17,440. See, here, so far as Anil is concerned, there is no surplus capital because his capital contribution per unit of profit is minimum. So, there is no surplus capital contributed by Anil because his contribution is the least one. But if you want to find out the Neil's excess capital contribution, that is 12,400, how found out? 29,840 minus 17,450, this is the surplus capital. So, this total surplus capital works out to be 17,200. Now, if you have got a cash balance of 17,200 available for distribution right now, pay Sunil 4,800, pay Neil 12,400. So, we have a cash balance of 21,680. The surplus capital redemption requires only 17,200 cash balance. So, I have got sufficient cash balance to pay out Sunil 4,800 and Neil 12,400. So, I can pay out this surplus capital that requires a cash balance of 17,200 that is available to me, so I can make a distribution. But I want to explain you conceptually, as against Sunil and Neil, who should be paid first and how much, that also I want to work out because I want to make the concepts clear. Now see, for 5 unit share in profit, his surplus capital contribution is 4,800. What is surplus capital contribution for 1 unit of profit, that we should find out. Similarly, for 2 unit share in profit, his surplus capital contribution is 12,400. How much? Per unit share in profit. So here I would like to write down once again the same process. 5 and 2 is the profit. So 4,800 divided by 5. So per unit of profit, surplus capital contributed by Sunil is 960 and Neil has contributed 12,400 divided by 2. So per unit of profit, surplus capital contributed. Out of these two, take the minimum and find the surplus of the other. So once again, select the lowest capital per unit. So 960 is selected. That is multiplied with the profit sharing ratio 960 into 5. So, and 960 into 2. So this is the surplus capital to be maintained, which is in proportion to the surplus capital of Sunil. Now if you deduct once again 4,800 minus 4,800, there is no surplus of Sunil as against Neil, but Neil has contributed surplus capital 12,900 minus 1,960, so 10,480. This is the surplus capital contributed by Neil, which is against Sunil and Anil. Now on the basis of this calculation, if you want to conclude the distribution criteria, that let me write down. First of all, 10,480 should be paid to nil. After making a payment of 10,480, 17,200 minus, so 10,480 is paid to nil. After that, 17,200 minus 10,480, 6720 is to be paid to Sunil and Nil in the ratio of 5:2. So this is a total surplus to be paid. As against these two, this is the surplus to be paid. So first payment is to be made to Nil, 10,480. 17,200 minus 10,480, 6720 is the amount to be distributed between Sunil and Nil in the ratio of 5:2. So 6720 is distributed between Sunil and Nil in the ratio of 5:2. So 4,801.96. 4,801.920. That is paid. After that, the cash balance left with me is 4,480. Now by these two distribution, total 17,200 surplus capital is already distributed. Now the profit sharing ratio and the capital ratio of all the partners is same. So if you find out the ratio of this capital and the profit sharing ratio, it is same, 5:3:2. So now all subsequent cash distribution will be made in the ratio of 5:3:2. So the last observation, the remaining amount is to be distributed in the profit sharing ratio because the capital ratio and the profit sharing ratio is same. So 4,480 distributed in the ratio of 5:3:2. So this is how distribution takes place. Now this is how total cash is distributed. Now next installment, 28,720. Here the capital ratio and the profit sharing ratio is same. So it will be distributed in the ratio of 5:3:2. So 5/10 of 28,720, 14,360. 3/10 of 28,720, 8,616. And 2/10. So 5,744 is the payment to be made to Nil. Now last installment is to be paid. As I told you in last installment is 20,000. But I hold 1,000 left after making payment of dissolution expenses. That is now available for distribution. That will be added to this 20,000 and 21,000 gets distributed. So though the installment is 20,000, the distribution will be made for 21,000. As I told to you, because 1,000 cash surplus left after payment of dissolution expenses. So 21,000 distributed in the profit sharing ratio. So this is how distribution takes place. And after distributing all these things, the capital that could not be distributed, the capital for which cash could not be paid, the reason behind that is realization loss. So because of this realization loss, what has happened? The capital of the partners could not be distributed. Now if you want to make a confirmation whether your sum is right or wrong, do one thing. Total of installments. This is the sales proceeds of the asset. So 16,280, 28,720, 20,000, make a total of all these things. Add cash balance 9,600 to it. From that, deduct the expenses of 3,000, you will get the total cash received for the assets. Find out the difference, 1,49,600. Minus that, you will get the loss, and the total of this loss will be same. So this is how realization loss is identified. That is always in the profit sharing ratio. The extent to which the capital could not be paid at the time of dissolution of partnership firm, it is because of realization loss. So this is how it has been worked out by preparing a piecemeal distribution statement. Even if you prepare realization account and try to find out the realization loss for this sum, you will find the total of this capital that could not be paid will be equal to the realization loss. So I have tried to explain to this sum by surplus capital method. I feel that you have followed all these things. Thanks to